If you're an investor thinking about buying real estate in Miami or anywhere in the U.S., there is one strategy that many experienced investors are using right now, and that is short-term rental properties. The reason is simple. When structured correctly, short-term rentals can offer strong income, tax advantages, depreciation benefits, and long-term appreciation all at the same time. And in today's video, I'm going to break down why this investment model has become so popular with investors. And make sure you stay until the end of the video because I'm going to give you a free download of my book, Miami's Pre-Construction Blueprint, where I explain how to identify the best opportunities in this market. My name is Guillermo Terran, broker associate with over 30 years of experience in the Miami real estate market, and I specialize in helping investors understand how to navigate pre-construction and short-term rental opportunities. Part 1. Why investors are looking at short-term rentals. The first reason investors are attracted to short-term rentals is income potential. Unlike traditional rentals where you rent the property for a fixed monthly price, short-term rentals operate on nightly pricing. That means pricing can adjust depending on demand. In markets like Miami, where you have tourism, business travel, major events, and international visitors, this flexibility can create significantly higher income potential compared to traditional rentals. So the first pillar is cash flow. Part 2. Tax advantages. The second advantage is something many investors don't fully understand at first, and that is tax efficiency. When you operate a short-term rental, many of the costs associated with running the property can be tax deductible. These can include things like property management, cleaning services, maintenance and repairs, property taxes, insurance, utilities, guest supplies, booking platform fees. What that means is that these expenses reduce the taxable income generated by the property. In simple terms, the government taxes the profit, not the total revenue. Part 3. Depreciation, the big advantage. Now here is one of the most powerful advantages of real estate investing, something called depreciation. Depreciation allows investors to deduct a portion of the building's value every year as an expense, even if the property itself is actually increasing in value. Because of this, it's possible for an investor to receive positive cash flow from the property while still reducing the taxable income. And that's one of the reasons many experienced investors prefer real estate over other types of investments. Part 4. The 4 profit drivers. When you look at the complete picture, real estate investments like short-term rentals can benefit from 4 profit drivers at the same time. Number 1, rental income. Number 2, tax deductions. Number 3, depreciation benefits. Number 4, long-term appreciation. Very few investments offer all 4 of these advantages working together. Part 5, why location matters. Of course, not every property works well as a short-term rental. The key is choosing the right property in the right market. Markets like Miami continue to attract tourism, international investment, population growth, and strong demand for short-term stays. That's why selecting the right building and understanding the regulations is extremely important. If you're enjoying this video and you want to learn more about real estate investing in Miami, make sure you like the video, subscribe to the channel, and leave a comment below if you have questions about short-term rental investments. And as I mentioned earlier, if you'd like to learn more about how to evaluate real estate opportunities in Miami, I'm offering a free download of my book, Miami's Pre-Construction Blueprint. In that book, I explain how to identify strong projects, understand developer risk, and position yourself to invest strategically in this market. You can download it using the link below in the description.